So I have some fantastic news for you guys today. It doesn't look like we're going to be in a recession because now we have positive GDP. Well, we're going to dissect this. We're going to dissect the unemployment numbers, and we're going to dissect the foreclosure numbers next. And then at the end of the video, I'm going to go over where mortgage rates are, and then I'm going to also show you where you can find my YouTube channel, but on podcast. So let's get to it. The GDP number came out today higher than expected at 2.6%. It was a shocker to some people, shocker to me, but I'm trying to dig in on this, and I'll come up with tomorrow. I'll have a more in-depth study of what the GDP number looks like because I dig into the numbers to see, is there an anomaly in there that's causing the number to go up higher than we expected? I think there is, and I think it's in the automotive section, but I'll have that in my video for you tomorrow. But what we want to talk about right now is the GDP number. Here's where we were throughout from 2018 to today. I'll get my head out of the way. Look at 2022. When you go down to that section, basically you have Q1 was a negative, Q2 was a negative, Q3, as we know, is 2.6%. What happens is this GDP number is going to get revised 2 more times. The number's probably most likely going to come down. So if you look at the GDP numbers so far in 2022, we're flat. Okay, but I'm not too concerned about that because we need to start easing inflation. Let's get to other parts of this puzzle. The biggest thing that I'm really concerned about is because of this, the unemployment numbers. Okay, so let's think of it this way. If the economy is slowing down, production's slowing down, well, this number is going to get revised, and that's why I'm really focused in on it. But what you have to look at is if production starts to decrease, companies don't need as many employees. So they can start laying off people. And you start seeing that the unemployment figures are ticking up just a little bit, but the chart, basically going back in history, isn't scary. Okay, so the Federal Reserve came in and said they're going to inflict pain on those out there that are looking to buy houses and employment and everything else. They're really focused in on this, but their concern is they just can't afford for us to go in a recession and or a depression. Okay, so we really want to focus in on the unemployment numbers. Why I focus in on the unemployment numbers is because I look back to 2008, what happened at that time? Well, the cause, let's look at the cause and effect. The cause was subprime mortgages. You might not agree with me on that, but you need to do your studies because not only the US, but the world was buying in on our mortgage business. And they got slaughtered back in 2008 and 10 when that debacle hit. So what happened is all companies just basically said, okay, we're stop hiring. We got to start doing something about this. And thus, the unemployment rate skyrocketed and then foreclosures skyrocketed. Nobody could sell their houses because nobody was looking to buy. Houses were underwater and it was a catastrophic event. Okay, so that's what happened. So these numbers are pretty stable. Okay, so we have a positive GDP. That means the economy is starting to click a little bit. We have the unemployment numbers that are okay. And now let's look at the foreclosure numbers. Are these scary? Well, let's really dive into this. This was just published, so you can't really say that I'm going back in history. You can see the U.S. seriously delinquency rate per pre-pandemic low in August. So we're at a pre-pandemic low, basically the lowest that we've had in a long, long time. But let's go into this and really dig into the details because you're going to have a lot of naysayers come in and say, nope, they're skyrocketing and they're going crazy. So if you look into the data, you can see for the month of August, 2.8% of all mortgages in the U.S. were in some stage of delinquency, 30 days or more, represents a 1.2% decrease compared to August of 2021. Okay, it's going down. To gain a complete understanding of this, okay, so let's look at the stages of delinquency. We have early stages, and that is at 1.2, up from 1.1, so we're up 1/10, okay? Advanced delinquency, those are adverse delinquency, those are people that are 60 to 90 days behind, 0.3, unchanged. Seriously delinquency, 90 days or more, 1.2, down from 2.6. Foreclosures, 0.3, up from 0.2. So you get my point. Foreclosures aren't running rampant. They're not running rampant now. Will they at some time? It could. But that's why we follow all this stuff. So if you're on the sideline waiting to buy a house, you're waiting for all those foreclosures to come to the market, you're probably going to have a long time to wait. So based on that, what in the heck is going on with mortgage rates? So for that, we swing over to the MBS market. And here's the MBS market. Let's let it caption first. The MBS market is liking these numbers as well. So the GDP number got posted. It was better than expected, and rates are coming down. So what you're seeing on the screen right now is what's going on with the price. The price of a mortgage-backed security. It's a bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. So we love when this number has a plus in front of it, because what this is telling me is mortgage bond prices are going up. And what happens in that case, mortgage rates or yields come down. So there's an inverse relationship. So we will love when this is going up. We've had a nice little rally coming lately, because you could see here the 52-week high and low. These are where mortgage rates are right now. But if you look at the 30-year fixed, the 52-week high was 7.37. So we're down about 0.25% from where we were. Not a bad start to all this. So what you're seeing on the screen right now is mortgage rates published by Mortgage News Daily. They do this on a daily basis. These are not my rates. These are not any lender's rates. These are just the national averages. So if you want to check out kind of where the national averages are, here's where you go, and that link will be down below. But if you want to really find out what you qualify for, what kind of rate can you get, I'd love for you to reach out to us. How do you do that? Well, basically go to therateupdate.com, and that is right here. And what I need you to do is, if you got a quote already, what I need you to do is send me that quote so we can scan that quote to over 84 of the country's largest banks and lenders. Because what I do is I'm a mortgage broker, okay? I'm set up with over 84 banks and lenders throughout the entire country, some of the biggest big companies out there. You probably know 80% of these. What we're gonna do is take your loan estimate, and we're gonna scan the whole country, all those lenders, to see if there's a better rate and lower fees for you out there. So how do you do that? Well, the first thing you need to do is go over to the website and go right up to here, loan estimate. All you have to do is download your loan estimate in there. So what happens is, if you apply for a mortgage, within 3 days, basically the mortgage company has to disposition your loan. They have to approve it, withdraw it, or decline it. If you move forward, they have to send you disclosures. Part of that disclosure package is a loan estimate, and it goes over the rate, the term, and all the fees. Okay, what I need you to do is just go into our website, click the loan estimate button. It's going to open up a tab right here. This is free services that we offer you. Scroll down, fill out all the stuff that you can above, then drag and drop that loan estimate in here. We'll get it, and within probably an hour or two, we're going to get back with you on however you chose for us to get back with you. If you don't want us to call you, we won't call. You don't want us to text you, we won't text. We'll just email you, however you want to do that. So if you enjoy my content, you do know now that we are on podcasts. So go to your local or your favorite podcast and just search for me, Dan Frio, The Mortgage Update, and you're going to find this as well. So all I ask you to do is, if you find value in my channel, don't forget to give us a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. God bless, guys. Thanks so much for watching. I'll see you tomorrow. Bye-bye.